Okay, so we're going to continue with question 3 of the 2025 paper. Right, so you'll see the question on the screen and we'll be working with the solution on the other side. Right, so here the required says prepare the statement of changes in equity for Quadro Limited as at 31st December 2024 according to the requirements of the Companies Act 2008 and International Financial Reporting Standards. The total column is not required. Right, so this is the template that you would use. You will not be given the template in your test or your assignment or the exams. You would need to know the template, right? So what goes in these columns on the left-hand side is basically according to the question, right? It's not hard and fast because it depends on what transactions your question has, right? And then in terms of these columns, like share capital, reval surplus, retained earnings, general reserve, that as well depends on the different types of equity that you have in your question. If they wanted a total column, the total column would be at the end here on the right-hand side. Okay, so they didn't require a total column here, but of course, balances at the end of the year, you had to include that. Okay. All right, so you start with balance at the beginning of the year. So balance at 1st Jan 2024 in this case, because our year end is 31st December 2024. And then you'll end with your balance at the end of the year, 31st December 2024. Okay, so if you look at the question, share capital opening balance was 2 million, reval surplus 450,000, retained earnings 1,150,000. So I'm just going to put those amounts in. There was nothing for the general reserve, right? And then the following transactions have not yet been recorded. So on 1st March 2024, Quadro Limited issued an additional 100,000 shares at 10 Rand per share. Right, so if they issued an additional number of shares, it needs to go in the share capital column and the Rand value would go in here. So it was 100,000 shares times 10 Rand, right? So that gives you 1 million. And the calculation for it is here. Working 10 times 100,000, 1 million. Okay, then the next part. The profit for the year amounted to 550,200. The accountant, Mr. Payne, has informed you that an invoice received from Walton Limited has been incorrectly recorded twice. The value of the invoice was 5,500. So if they recorded an invoice twice, it means that your profits would have been lower than what it should be because they would have recorded an expense twice, which means your profit is too low. So you need to increase the profit for the year. So it'll be 550,200 plus 5,500. Okay, so that gives you 555,700. And then total comprehensive income for the year, in line with that, you would need to put in your profit and it'll go in the retained earnings column because your profit for the year increases your retained earnings. Then the third one, on 31st December 2024, Quadro Limited contacted an expert to revalue their property. The report indicated that the property should be valued to 850,000. So at the moment, the cost of the property is 1.2 million. 1.2 million minus the accumulated depreciation of 530,000 gives you 670,000. So we are carrying the property at 670,000, but it's actually worth 850,000. So we need to revalue this property. So when you do the calculation, you'll see that your revaluation is 180,000. So it's 850 minus the carrying amount of 670. That gives you 180,000, and we can put that in line with the revaluation, okay, and it goes in the reval surplus column. Number 4 says dividends of 30 cents per share were declared and paid on 31st December 2024. So it's important to note that it's 30 cents per share. So you need to look at the number of shares and multiply it by 0.3, right? Because 30 cents will be 0.3. So the number of shares, they told you at the beginning that they had 200,000 ordinary shares, and then they issued another 100,000 shares. So in total, they would have 300,000 shares in issue. 300,000 times 0.3 gives you 90,000. So the dividends that was paid was 90,000. And when you pay dividends, it comes out of your retained earnings. So minus 90,000 in the retained earnings column. The number 5, a general reserve of 26,000 is to be created. So remember, we didn't have any balances in our general reserve, right? So now they are moving money between reserves. So when money goes to another reserves and they don't tell you where it's coming from, it would come from the retained earnings, right? So you're transferring money from the retained earnings to the general reserve. So minus 26,000 in the retained earnings and plus 26,000 in the general reserve. And then at the end, all you do is total. And these are method marks. The totals are always method marks. So they're the easiest marks to get. So please make sure that you include the totals. Don't leave them out because it marks for Mahala. Okay, and I'm going to stop there.